Hit it.
It's Friday, June 10th, 2022. I'm Patrick
No. Just keep going. Try it again,
No, I'm
buddy.
not. I'm not.
Yes, you are. Go.
No, I'm not.
Lena's going to put the whole thing in. The whole thing. Just go. Hit it.
We talked about this.
It's Friday, June 10th, 2022, episode 183. I'm Patrick Seresner.
And I'm Kevin Muir. This week, we're running old school. It's just Patrick and myself shooting the shit about these crazy markets we're experiencing. Let's hope Patrick doesn't decide to go streaking by the quad and sticks to chewing crayons instead.
We'll end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer are we drinking this week?
So this week we are drinking a beer from Spain. Estrella Galicia Cerveza Especial. Oh my God, I had to practice
okay.
so
Very
many
good.
times.
Very well done. I just want to say something before we drink this. My doctor told me my conch doctor told me no beers, no drinks. And Patrick, as his usual self, was peer pressure Patrick. He's like, just have a few sips. Just like when it touches your lips. It's just so good.
Peer pressure Pat.
So let me kind of talk about this beer for a second, because this beer is just like the Coors Light in Spain, right? Like you can buy this at any grocery store. But we were down in Barcelona with all of our mastermind members at Big Picture Trading, and we were drinking like 3 a.m. Lena was there. If you see it in pictures, and we were drinking street beers. What would happen is these guys would be walking around like drug dealers offering beers, and like they would just like, yeah, you want a beer? You want a beer? And like it's like €1, whatever, a beer. And so we ended up like drinking like 30 beers out on the streets, and I'm like, well, we have to feature this beer on the show anyway. So
it's actually a pretty good beer. It is a little small, so I think my conch doctor will be okay with it. By the way, Patrick, it sounds like speaking of conch, it sounds like you're calling out of a conch.
Yes, it is. I'm in a pretty empty room with a microphone, and I'm going to get I apologize to everyone, but that's the way it's going to be today.
And what continent are you on this week?
I'm in the North American continent. Anyway, we'll leave it at that. Anyway, Kev, give us some side effects, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much Huddle may include PTSD, which is the post-trading stress disorder. And then this next one I think is real because I can't pronounce it. Crayontitis. I'm pretty sure that's something I get after listening to you for too long.
And that shit happens, bud.
All right. Let's get to talking charts. We got a long one, and there's definitely a lot going on.
Oh, my goodness. Well, let's get to the top 3 things we were watching last week. And we were talking about the Euro and the ECB. First of all, any comments on the ECB?
Well, they're trying to get off of zero. They're setting it up, but so it's a difficult line that they're drawing, and a lot of the real problem ends up being the other periphery nations and how much they're going to support those. But what was interesting was that they said that they no longer need to buy bonds and support bonds in the same percentage as they used to in terms of having to buy it based upon the GDPs of the nation, or maybe it's the amount of debt outstanding. I can't remember, but it is a departure, but it is something to watch. I know there's a lot of people are talking about the Fed, a lot of action there, but in reality, the ECB is actually more exciting because we've had negative rates for a long, long time in Europe. And it just might be that maybe by the end of the year, those negative rates will be gone and we'll actually be in positive rates. And the real question is, how will the economy and markets react to that?
There you go. I just want to comment on the euro because pretty much the euro was struggling for the last couple of weeks just to make any progress. And the ECB didn't really move the needle until obviously these inflation numbers came out where we saw that US dollar strength. But it's a pretty dominant downtrend in that euro and a failure of this rally and rolled over. It's just that we have to respect the prevailing trend remains dominant, and the vulnerability of the euro heading lower here is still very real. Anyway, number 2, it was the inflation numbers, but it really should have been number 1, right?
Oh, it really should have. Unbelievably bad inflation numbers, surprised everyone. I don't think any of the economists surveyed thought it was going to be this bad. It was shocking. It sent the markets for a tailspin. It had people talking 75, 100 basis point surprise hikes. It was dogs and cats living together, as Peter Bankman said in Ghostbusters. Really crazy numbers. The real question is, at this point, was that kind of the obscene number, quote unquote, that we see that marks the top in inflation? And one of the fellows that I work with, the astute trader, he says everyone's been saying that this is the obscene number and this is the inflation number that's going to be the top for the past 3 or 4 numbers, and it just keeps getting worse and worse.
Yeah.
It's shocking. All I can say is, what are all your deflationists that those guys that are up on your walls in your bedroom? What are they thinking about this?
No comment. I feel that this is a trap. Anyway, listen. I remember like 5-6 years ago when you talked about inflation. You were only 5 years early. It's
touche. That was a good burn back. Okay, well done, buddy.
But the thing is that what's particularly interesting was that obviously thematically a lot of people were talking about peak inflation and the chance it could roll over. But when I look at the crude oil moving the way it is and energy prices rising the way they are, I feel like it just feels premature to be looking for a rollover inflation in the inflation numbers until we see that this story has kind of matured a little bit more. Do you have a different view on that?
No, I think you've been saying that for a while. So kudos to you that it was a great call. I think eventually the real question is, does the U.S. dollar strength bite commodities in the ass and cause a sell-off out of the blue? But until we get it, you're right. Like, the numbers just keep getting worse. And not only that, I believe I didn't dig really deep into them, but I believe it's spreading from goods to services inflation. And it is becoming more, let's just say, part of the economy and more structural, in that it's not just a rising price of oil that we're experiencing now. And it's worrisome, no doubt about it. And the real question is, what does the Fed do, and do they panic? But I'm sure we'll talk about that more in the future. So what was number one? What did we think was the most important?
Well, we were talking about the short squeeze. It was a short squeeze or a new bull run. And the thing is, I would even argue that it was neither, because if that was a short squeeze, it was a pathetic attempt to wash out the shorts. The bounce didn't have any teeth on it whatsoever after a quick little 2-day. If you look back, there was a 2-day squeeze in the market. That was back here on May 26th and 27th, where you had just 2 solid up days that may have washed out some shorts, but really market got heavy, distributed, and rolled right over now. It's
almost like it did those 2 days in reverse these past, like, Thursday and Friday.
Yeah. Oh, even with more velocity, and we could talk about this chart in just a moment. But let's go and talk about the top 3 things this week, and that's really where I want to talk about this. Does this market resume selling? And obviously, this inflation has thrown everyone out of whack. And so we find ourselves in a situation where that market finds itself all the way along its previous lows. But it's not just that the S&P's down there. Like, you take a look at the NASDAQ, which was down over 3% today, but we're right back down to those lows after a very, very weak rally. We couldn't even muster up a 50% retracement in the NASDAQ during this entire sequence. And but when you look at things like those darling FANG stocks, like Apple is trading right along that previous low. If it breaks to a fresh low, how does the market not head down? Look at Microsoft trading down along that previous low. Look at Amazon, which obviously had the split, and that giving almost all of it back and almost heading right back down to the bottom end of the range. You take Facebook, it's about to break to a fresh new low on the downside.
Whoa, 1 second here. You're calling that by the wrong name.
I'm not calling it by the other name. It's Facebook. I refuse.
They changed the symbol, though.
But Google is Google, bud, and Facebook is Facebook.
Meta is Facebook. I get it.
Exactly. Okay. It's like, this is they can't make me change it. Anyway, anyway, but we're obviously seeing the pressure on these names, right? And the thing is that how can we have a market that really gets any traction when the big generals, the ones that are the market cap behemoths, are so structurally very weak? And so the question I have for the top three is: does the market resume its selling? Did this inflation number simply break the will of any new money being put to work, and is the prevailing downtrend just going to continue into the next week?
It certainly looks that way. And
Yeah.
one thing I want to highlight is that Thursday afternoon we had some strange selling that seemed to be inexplicable in terms of there was no real reason or catalyst for it. And it's I'm wondering if Nancy Pelosi's husband knew.
That's quite possible, buddy.
All right,
All right.
number two, the U.S. dollar.
I had to squeeze it in, buddy. But
No,
you know
you
what?
do. You know what? I've been saying this for a while, Patrick. It's sucking the oxygen out of the room.
Yes.
It really is, and that's the way to describe it. Is when it rises, nothing can go up. Nothing.
Yeah. It is the reserve currency of the world, and all cross currencies are influenced by it. Interest rates, commodities, everything has a drag by it. It's one of the intermarket anchors. And when you have a dollar that look, we're almost right back up to its previous high. We're above 104, but the thing is that where is it coming from? And obviously, the one crazy one has been that breakout in that U.S. dollar against the Japanese yen, and that did not waste any time breaking to a fresh, a decade high and just running. I mean,
So I did not get a chance this week to talk to my yen guru, but I should have because, as I said, he nailed this trade. He nailed it in terms of telling me to cover and go the other way and get long yen there. But I do find it interesting, Patrick, that for the first time we had the Bank of Japan or maybe it was the government of Japan. I don't know who was talking about it, but we were talking about intervention again. And God, it's been a while since we've had some intervention in the currency markets. I just want it just for fun. No, I love intervention. I think that's the greatest trader job in the world is to be on the other side of the bank. So they phone you up and they say, where are you on 1 billion yen? And it's the Bank of Japan and you know what they're trying to accomplish. And so you got to give them a price. You give it down a figure or something like that. And how much do you sell when you get it down there? Maybe you sell like 300 or 400 million, and then you're stuck with the last 600. It's just, I think it's a great game to play. And I almost want it just so we get some movements in these currencies and it ends up being fun again. But I do think it's coming. I know maybe I'm wrong, but I think that they're getting nervous about it. It's moving, right? Remember, you always talk about it. Why don't you draw your lines in terms of how fast they're moving? Because they're definitely getting more and more steep.
Oh, well, this is, I mean, just like look at the velocity of both of these rises right here. And it really comes across like the current move is even steeper than the previous two. Like it's just accelerating, and there's now a lot of the chatter about echoing of the currency crisis back in the 90s in Asia, and certainly there's talk of whether or not China is going to sit by and watch this kind of a devaluation occur and give Japan a competitive advantage, which certainly would be seeding a currency war of some degree. Do you think this thing can really get out of hand?
I think that the potential for outsized moves in these is greatly higher than it's ever been. And I'm talking about big moves, like 5, handle moves in the yen. And that's what I'm thinking where it could occur. And listen, it might be the first 5 handles or the first 10 handles or the other way, meaning they go even higher before they step in and go, push back and say that's enough. But it's getting scary. It's getting something you should watch. It's something that should be on everyone's screen. The other thing that you should be aware of is it's basically tracking yields.
Yeah,
it's
that correlation almost, to the 10-year, right?
Yeah, it's actually the correlation between the yen and the JGB 10-year and the US 10-year, but the thing about it is the JGB 10-year basically doesn't move. So the question is, Patrick, does this break the JGB or the Bank of Japan's yield curve control?
Well, that's
Do
the
they say, hey,
speculation, right? Like that's the idea is that do they have to capitulate and stop trying to pin the yields because otherwise the flow is just abandoning Japan, right?
I'll tell you, it could never happen. And do you know why?
Why?
Because I'm short JGBs. All right.
Well,
What's
okay.
it?
Do you let me know when you cover? Okay, but
Yeah, that's
just
right. I'll just journal them into your inventory.
exactly.
I'm
So
puking. I'm puking. Here you go. You can have it because it's going to be a winner from here.
yeah.
Okay.
Look at that chart on the U.S. dollar against the Chinese renminbi. Like it just looks like a bull flag formation. You take that thick crayon and connect those highs. It really feels like it may attempt to break out here, right? And that brings back the question of what's happening in these European currencies. And you can see the way that euro is breaking down. I mean, we're at a territory while, the previous low was down at 103.5, but really it only spent a couple days below 105. To me, once we're back below 105, we're back into quite a bit of a danger zone. When you go to the weekly chart on the euro, that we are right along the lows where for the decade where the bottoms of the yen occurred. I mean, if we wander down below 103 on the euro, that's not uncharted territory, but it's certainly going to cause some substantial nervousness, as that everyone's going to come out with parity on their mind, and will we see the one or even below on the euro here? Do you think it could get down below parity?
Well, I'm kind of scared when you start taking me into the danger zone. I feel maybe like I'm like Goose, and I'll end up at the Maverick trying to scoop me out of the ocean, and I'll already be dead. That's what I worry about. No, I must give you again props, because didn't you say that this chart formation was, what was the technical formation? Looks like shit.
Yes,
Wasn't that last week?
That was the exact term.
Yeah. So well done, buddy. Like you're no, honestly, that was a very precise technical analysis.
Because my vocabulary is so rich with technical terms that I went to my strongest playbook and pulled out.
I don't know, Patrick. All I know is that if the dollar keeps doing this, it's gonna cause a problem.
Yeah.
That's all I know. So between the dollar going up at this speed and the stock market, the more that the dollar does this, the more that we have a chance that something big breaks.
Yeah.
And I hope it doesn't do it, but it very well could. The markets are feeling jittery. They're feeling thin. There's very little going on, and yet people are moving them around. So who knows? I still don't think that's the base case, and that's not what I'm looking for. But you need to be kind of respectful of the action, and so far the action's terrible.
All right, so we can talk more of these charts when we move on, but let's go to the number one thing to watch, and it has to be the central banks. I mean, obviously the FOMC is the highlight in the middle of the week next week, but we also have the Swiss bank and a number of other central banks that are they're coming out. So it's certainly going to be interesting to watch. Is there do you think there's a chance that there's going to be a bigger rate hike?
No. Wrong choice of words. Is there a chance? There's always a chance. A good trader never says never, but do I think that's the base case? No. Now, having said that, you mentioned the Swiss National Bank, and I'm just wondering about them. Do you think that they're getting nervous about all their long S&P positions yet?
Well, how about all their FANG stock holdings and stuff like that?
Overweight on the overweight on the FANGs.
It's a smart idea. Print a bunch of money, buy a bunch of U.S. equities, and then watch them get.
What could go wrong? What could go wrong?
The Bank of England is also up to bat next week as well, right?
Oh wow, it's going to be a fun week, and it'll be interesting to see. I think that when there's this many people watching it and that there's this much uncertainty, that the worst gets baked in and that it won't be an ugly surprise.
That's you're dead on. You're dead on. I'm going to agree with you 100% because the thing is that it is the
we're going to crash next week for sure.
Well, we can, but I don't think it's the FOMC that does it. I think that at this stage, everyone is baking in so many different scenarios that it's so hard to surprise the market. Because in order to really create a liquidity event, it has to be a big surprise. That's why the CPI number today caused so much stress because nobody saw it coming. And the thing is that I just don't think the Fed is going to leave the playbook too far from what they've already advertised. I mean, there's a chance that they might change their language a little bit and kind of give a little more of a hawkish kind of a tone to it. But I don't think that they're going to deviate from the plan.
Yeah, I'm with you. I think they continue to do 50s at a crack until something breaks. And they just keep doing 50s, 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 50s. And although Wall Street will say 75s, 100, and why don't you just get it over with? I just don't see it happening. But who knows? Maybe I'm wrong. Maybe they do surprise. But if they do, watch out.
Yeah,
it'll be crazy because, like, we just talked about the dollar. We just talked about all the things that could go wrong. That just exacerbates an already bad situation on that point of view.
Yeah. So the one let's talk some charts. And the first thing I want to highlight, going back to the S&P 500. Now, I am not necessarily going to stick my neck out and say that a downside downdraft, like a liquidity event, is a guarantee. But I'd like to just offer just some of the target zones. Like if the S&P breaks to a lower low, using the rules of symmetry and technical analysis, the natural targets are all the way into the 34 to 3600 levels down below. And it's interesting because there's been a lot of, like, even go back a year when not a year, more than 6 months ago, when Zuloff and the Brigden and all the other guys were all talking 3,500 as a downside level, as a realistic target for the S&P. But like, if the market here breaks to a lower low after this pathetic rally, that is now actually technically measuring out there. I mean, we could see that kind of a 10 to 15% downdraft very easily. What would be interesting to me is if that was to happen. Like, we haven't broken to a lower low. There's always a chance a double bottom forms or support comes in or the Fed says something more dovish. Who knows? But if the market does break to that lower low, the one thing I think I'm going to be watching is whether this time the fear really intensifies, like whether or not we get something that feels much more like a capitulation, or whether it will be a lot more of the same, which is this slow bleed that just doesn't leave any resolution or anything that you can lean on to play the other side. That's one thing that's going to be on my mind. Like, I mean, the VIX is only at 28 at this moment. We haven't seen, even those two very ugly down days, we haven't seen anyone puking in a bucket and grabbing at gamma to hedge out their books right now, right?
Puking in a bucket, grabbing a gamma. Sounds like a fun Friday afternoon. Well, the reason I think that we haven't seen this is because the market has actually been fairly well hedged. And this is part of the reason I think that it has been so orderly. And one of the things, that Brent Kachuba from Spot Gamma highlighted last week was that after, on the other side of this option expiration, we could see a lot of those downside hedges be taken away. And at that point, VIX will potentially have the room to rise a lot more, which also would create kind of a Vanna effect with more selling. So one of the things I'm thinking about, Patrick, is that as we get closer to OPEX and then as start rolling them out, we could find a change in sentiment, and we could get those grabbing for new, fresh kind of hedges that we've seen that you were just talking about. And but I don't know, it's summer, and one of the things that I think, like, I sure hope this doesn't end up being like one of those long-term capital summers. Like, I don't know, 98 was just like one of the worst summers around, when you just get these moves that occur with no one around, and it just ends up being kind of no volume, scary moves. Most summers just end up getting quiet. So although, yes, I could make an argument that you should be reaching for VIX and buying vol because we're moving more than the underlying, at the same time, I think there's a better chance that the market just settles down. Now, watch that. You say this, Patrick. The fact that I said this means that we're going to crash for sure. So hold on to your
But
seatbelts.
but it would be interesting because with the FOMC next week, it might create a lot of people that anyone who wanted to puke out their stocks did it right today, right? And so now, as we get into next week, who's going to be selling in front of the FOMC? And we might.
Well, but Patrick, I'll take the other side of that. I don't mean to interrupt you, but there's a lot of big accounts that are still way overweight all those FANG mats. And yes, they're selling, but when they go to sell these things, it takes weeks, months, years sometimes because they're so overweight. And so I'm not as
Okay.
positive as you that we can't see continued pressure, especially in the FANG mats.
No, well, so here's one scenario. Maybe not my favorite scenario, but we start the Monday with a 50-point down day, go and retest the previous lows. We get a bounce, and then things kind of into the FOMC and through into the OPEX roll. The market kind of retraces, stays well under 4,000 throughout any bounces, and then the volatility really kicks in after the OPEX. Like it could be a scenario that plays out, and one way or another, that's the thing to watch next week, isn't it?
Well, it's not just next week, next month, and it's really the question everyone should be asking themselves:
Yeah.
Can the market just stabilize? Does it? Right now, we're in a very defined downtrend, and it seems like the market has still not found its price that it wants to trade at. And when will we get more of the sideways action that I'm expecting? Is that going to be, as you say, 3,500? Maybe it is. Maybe we have to go there. Maybe there's a lot more selling still ahead of us. But there's also a chance that that we just kind of grind around here, and it ends up being much ado about nothing, and everyone's all excited about either being a big bull or a big bear, and neither one really works.
Yeah. Before we go to commodities, I want to look at some of the actual sectors. And let's start off with a little bit of Dow theory, which obviously going back loves the idea of watching transports. I just want to throw it out there that the transportation index is literally about to break to a fresh low.
Okay, so tell me about Dow theory and what that means.
Well, one of the tenets is simply back then when Charles Dow was tracking the markets, the transportation and the rails were much more important. I would argue you have to kind of almost rethink about the way that to approach this today. But the back then you couldn't have the industrials and the transports not confirming each other. And so you basically are watching to see whether or not the two are trading in line. And so like if the industrials are holding up but the transports are breaking down, then you know that that's not a bull market. That you're looking for.
And does that mean that because the transports might be more forward looking?
Back then it would have been, but back then I would argue that transports, like the rail stocks, were the hot stocks that were sort of like today's FANG stocks, right? Like back then, that was the place to be for growth, and they were really important and huge market caps back then. But anyway, the point is that just looking at the transports, this chart is very, very weak. And failed rallies, broken right back down to the lows, and the transports just continue to look like they're ready to break down again. And
can I try my hand at technical analysis
Please.
to give you my sum up?
Yeah.
The chart looks like shit.
Your crayon's not thick enough, buddy. Your crayon's not thick enough.
Is it pardon? Okay.
All right. So but let's talk about the other other sectors. And what I want to start off with just focusing on the technology one with some of these Spider Select sector ETFs. And this one is the XLK, which is the tech basket. And look at that. I mean, it just looks like the rest of the market breaking right down to its previous low. Social media stocks just could not even muster up a half decent bounce. This is global social media, so obviously this has been weighted also into a lot of those Chinese social media plays. But like this rally, it looks a lot like ARK, right? Like it's just an incredibly weak rally that is rolling right over. And then I don't know if I know any person that was a little too bullish on the financials, but This
That guy's an
yeah,
idiot.
exactly. But what an
They sure are trading like death. Like,
oh
I heard that Goldman Sachs hit a new low today.
yeah,
I heard the squawker screaming that out.
yeah. Look at that,
Oh yeah. Oh,
right?
just terrible
Well,
looking
I mean,
charts.
like who's going to do any?
I guess you flatten the yield curve. You're raising rates.
Who's going to be doing investment banking and all the other lines of their business in this kind of a market environment? This is not an environment like, I mean, they can't make it all off of their short sells.
Yeah. Well, they probably
Oh,
can.
okay.
You know, one thing I will tell you something as a day trading. Goldman Sachs is one that everyone should have up on their screen on their radar, because I do find that it is a tell. It trades well. It gives you clues, and I don't know why, but it just does.
There you go.
So if you're a day trader and you want to watch for, you want a stock that kind of gives you some sense of what the market might do, keep your eye on Goldman Sachs.
Yeah, and what I want to simply highlight, like there is when you look at these financials, there is absolutely nothing positive you can say about this chart. Failed rallies, rolling over. The selling is has far more velocity than the rallies. It just continues to show no sign of a bottom. Right? I mean, I'm more than happy to become bullish when the charts and the technicals and the price action support an argument like that. But right now, there is nothing positive to say about a chart like this. And what's even this, look at the way that the regionals turned over as well. It's just early to be bullish this space. The consumer discretionary stocks, a very, very weak rally. Rolled right back down. The consumer staples, and this is actually interesting. First of all, consumer staples weren't down on the day; they were relatively flat, and there's a defensiveness in them. But really, the WalMarts of the world really killed the safety element of that trade. And while I think that on a relative basis, you're going to lose less being in consumer staples, I'm finding that what's interesting about the way you kind of reflect on the first half of the year versus us going now into the second half, even though we haven't started the second half, I'm just kind of highlighting the differences of the first 4 or 5 months of the year. There were places to hide. You could have been in utils, healthcare, consumer staples. These were places that were actually making money in the first 4 months of the year with energy. And what we're seeing is sector after sector being shot. And and it's becoming closer and closer to the correlation of all equities going to one, and that's to the downside. And I still think consumer staples are going to outperform on a relative basis, but that doesn't mean it's going to be a positive number.
So I'll take the other side of that.
Okay.
Consumer staples are priced for perfection. They have not. The fundamentals keep getting worse, yet everyone's hiding in them. We're getting more and more bad news out of it. I'll buy your consumer staples, and I'll sell you your consumer staples, and I'll buy industrials on the other side of it.
There you go. You know what? You know what? Maybe we have a bet on this one, but I mean, the problem is I don't think that thesis works on a weekly bet. Like it has.
I know it is a longer term.
It's a longer term, and maybe we'll have to kind of change our bet a little bit. Anyway, the retailers have been so weak, just continue to be under a lot of stress, rolling right back over. But this is another one. Like, look at the way the healthcare broke down. It's about to break down to a 52-week low. And
that's what consumer staples is going to look like.
yeah, it's possible, but I'm just talking about the relative strength. I still think
I think
technology is going to do worse. I think even your financials will do worse.
Oh, there we go. We might have a bet.
Okay. So anyway, that's but the biotechs rolled right over. It's just so ugly out there, dude. It's there is nowhere to, well, there is, like, I mean, there's that place to hide the energy, but like even energy was down today. But industrials, like this is what you're calling a bull phase. Are you ready to buy this?
No, I'm not calling it a bull phase. I'm saying fundamentally, I'd rather own the industrials that I think have increasingly priced in more chance of a recession than yours.
Yeah, but this is still a brutal chart.
Yeah, I'm not denying
This
that.
this you know what?
You know me, I've got like 4 fingers left. You know, I always try and
Yeah,
catch
but
knives.
even what's interesting is the metals and mining space have just been incredibly weak. I know today was actually a little bit of a safe haven, being in some of the different miner names that have held up today. But generally, this has been an area that started to struggle over the last month, and there really is less and less places to hide. Another place that I thought was going to do better than not was aerospace and defense. I thought, with the way that the geopolitics are reshaping, that there's plenty of new government spending that's going to feed these aerospace and defense contractors new money, but they're getting no love either. It's just a struggle out there.
I guess you could argue in a bear market nothing goes up. And then back to the thing, I still think that the US dollar rally sucking the oxygen out of
Yeah.
the room. And I guess I should use that the other way around. I think the reason the US dollar is going out is because the Fed is sucking the oxygen out of the
Fair
room.
enough.
And so credit is being destroyed. Therefore, there's less US dollars out there. Therefore, credit's getting paid down and the dollar's rallying. And so therefore you get the dollar rallying. It's not rallying for good reason. It's not rallying because things are so great in the US. It's rallying because global credit is contracting, or contracting on a relative basis at least. And therefore I think that it's going to be tough for stocks to rally.
And so, but look at the way the material sectors, I mean, you can use that as in the same theme as the industrials in some degree or another, but like they're right along those 52-week lows as well. The only space that's been really holding up is energy. And that's now running into trouble because Jim Cramer just went long. No, but
so here's a question for you. If all of a sudden you saw energy shit the bed and give up, let's just say a very quick 10 to 15%, would you argue that would be closer to the end of the correction
of energy or the whole market?
do you think of this market correction, do you think that almost we have to have energy go down before this correction is going to be finished?
You know what? The thing is that if this sell-off gains traction, it leads to margin calls. And margin calls, you sell what you can, and what often people turn to some of the profitable stuff to sell to meet margin calls, because psychologically it's easier to lighten up on the things that have been working rather than admitting you are wrong on the losers and selling them at the bottom. And so what happens is that if we really get into a liquidity event of selling that was driven by margin calls and things like that, then energy is going to sell in that environment. It's just that's sort of the nature of flows, right?
Yeah, I think it'll be interesting. I don't know. I am a little scared because energy.
There'll be no fundamental reason for energy stocks to go down other than the liquidity of the whole market. And inevitably a correction will likely emerge, but I still think that this is one of the few places that you are still very clearly in a bull market.
Yeah, and I'm not disagreeing about that. I'm just wondering if we need to almost have the correction in energy before this is gonna be over. If you understand what I'm saying.
Yeah.
And that's kind of what I was thinking about. And I'm nervous because it seems to be that more and more people are along this thing, and it feels scary. And you know me, Patrick, I'm not very good at riding trends and staying with it. And I saw that Jim Chanos tweeted out the following. He says, we're now in the there is no solution phase of the bull market. History might disagree. And I'm not trying to say that this is the time that you should be selling, but it definitely, my antenna is up, and I'm a little more nervous than I've been about energy.
Okay, but let me kind of stop and reflect on what usually is the type of a condition that you would see when a real bull market like that ends. I would imagine a scenario where the weighting of the energy stocks into the S&P could be 10 to 20% weighting as it's a huge overweight in the space. There's huge money being thrown at speculative new energy startups as everyone wants a piece of the action of this thing. Like, you're not seeing, like, I mean, all we're seeing is a lot of money being thrown at the existing stocks because they've been working. But and this is why I think that a correction is likely to happen. But I think the ultimate bull market top of energy, I don't think that the conditions are there yet for
listen, I'm with you, Patrick. I'm by no means saying that we're not headed much higher. I definitely think we are. I'm just wondering about the path.
Yes,
And
the path,
I'm
and
just
a correction can happen if the whole stock market goes. I can't imagine a scenario where energy stocks are rising while the rest of the stock market is getting, wiped 10% on the downside. I think that there's going to be a correlation of all equities, and energies are probably the ones that should be bought on dip if we do have a correction like that, right?
Having said that, you can't imagine that, but isn't that what we've almost experienced? Energies are almost on the high still.
Yeah.
And the stock market's lower. Anyways,
Well, I mean,
it is
listen,
interesting.
it's been 2 days of selling, dude. Like that, we haven't seen another leg down yet. Okay. Anyway, let's talk. Utilities had a failed follow through, rolled over. It's just, again, sector after sector getting heavy. And then there's this one sector I think we made a bet on that on the home builders.
That guy, what an idiot! Who the hell likes that thing? That looks like death.
You know what? I think actually that a few of the people that I know that have some really smart fundamental reasons why home builders are good, but they just simply don't have good crayon skills. The
You could say that again.
and
Having said that chart, out of all the charts you've shown, it hasn't gone down really in the last 3 months. It's unchanged.
But it's still a
like,
very
okay,
good chart.
Today was an ugly day, but imagine before today, it was unchanged from the beginning of April.
Yeah.
Meanwhile, a lot of other things was much lower. I don't know. I'm not giving up.
Okay, there you go. Like, listen, you can anchor off. I think that at one point you're going to make some good money on your trade. It's just I think you're just going to get churned a little bit, and you're going to have to hold much longer to get to your outcome. Anyway, so what I wanted to just touch on, obviously, one of the places that actually had a good positive update was gold. This is the gold miners here particularly, but what's interesting is that we had a pretty big break in bonds. We'll talk about commodities and bonds in a moment, but the gold miners took money in today and reversed properly when literally nothing else was bid.
Yeah, and it's good looking chart almost, right?
No. This is still an awful looking chart. It's
better than a lot of the other ones.
It's a bullish engulfing candle, which often can mark some sort of a support line and a potential reversal thing. But one day doesn't make a new trend, and this has been an awful downtrend. It's got a support underneath it, but I mean, that's all you can lean on at this moment. I mean, it's not that gold can't start rallying, but I'm not going to go and start saying that this is a nice chart all of a sudden just because it's a one-day reversal.
So, Patrick, when you brought up the gold chart, you started to say, you kind of prefaced it with a little bit of a bull, like you leaned into a little bit,
because it was the only.
I just want to say that every single gold bull felt like Obi-Wan, and they said I felt a great disturbance in the force, as if millions of voices suddenly cried out in terror because Patrick was going bullish on gold.
I own too much.
It's like something is terrible has happened. That's what I felt like. I was like, oh, he's gonna go through it. Anyways, no, listen. I agree with you. And one of the things that I waffled. I've waffled between oil and gold, but I've always said that coming out on the other side of this, I originally said gold will lead out on the other side. Gold will lead when they sense that it's kind of maximum hawkishness of the Fed is in there.
Yeah.
And I thought that today was interesting that gold was able to rally, considering that the 2-year got hammered, the US dollar went bid, and yet gold went up.
Yep.
What's that telling you? Like, is maybe gold?
I hate just one day doesn't make a new trend.
No, you're right. You're right.
What I'm gonna maybe that should have been on one of the things that we should have put in the top 3 things to watch to see whether next week we continue to see that kind of a trend emerging, and maybe that will create the backdrop, which means the summer and into the fall, gold could improve. But it's just all I want to observe today was that gold was one of the few places that was taking money, and a lot of gold miners were up when pretty much everything, including energy, was down.
I'm with you. I'm with you. I think it's behaving well. I think that it'll be ironic if Einhorn. He was talking at the Sohn conference yesterday. I don't know if that's how you say it, but anyways, he was talking a bull game, and even though he's the farthest thing from a macro trader and really just a value investor, it will be hilarious if he bottom ticks gold in this and it takes off from here.
Why did he short it or?
No, he's long it.
Oh, there you go.
He gave a big argument. I didn't listen to it, but supposedly he gave a big thing about how the Fed is not going to be as hawkish as everyone thinks, and I don't know, yada yada yada. He's buying gold.
There you go. I wanted to just one last thing I wanted to look at was just looking at the Canadian banks. This is the Canadian Financial ETF, and just like give it. They just look the same as U.S. banks. Just a weak rally, rolled right over. It's nothing really exciting to say about that. What's interesting though, Canadian energy stocks have actually just been doing so well since the start of the year, arguably far better than U.S. energy names.
Our valuations were cheaper. We had a lot of catch up to play.
Yeah, and just what a run they've had. Obviously, all of these are due for a bit of a correction, but just the Canadian energy has been a great place to be on that front. Anyway, I wanted to touch on some of the actual commodities themselves. Let's just quickly throw up that chart on oil. And what's interesting here is that oil, even though it was a little bit off today, this trend higher is pretty intact. This is still a very clear, and what's interesting is obviously we haven't beat the continuous chart highs, which is that back in March.
Sunday night is gold going to 300 or just 200 open.
Yeah, but that 130 level that was kind of put in over there isn't beat. But when the traders are trading that July contract, and anyone who's long the July contract is at fresh highs, and this is still a very healthy chart, and it does measure out to 130 plus. It'll be interesting to see whether oil stays resilient through all of this and continues to crawl higher. The other thing is worthy note is gasoline's been holding up very well, up along their highs, and also plugging along. Obviously, everyone talking about fuel prices, like that's the cool thing. That's the new hip thing to do on Twitter, is to announce what the gas prices are in your area, right? And
then say this will end well.
But this is a chart that is really still ripping the upside. This has an influence. It's one of the things, like, how can inflation start to come off if you got a chart ripping like this on the upside? Another one. Let's talk about the widowmaker, nat gas. And what's interesting about nat gas is that it continues to actually, almost look at it as the reverse of your views on home builders, which is even though it's been a very distinct uptrend, the thing is that the highs that came in April, we really have not seen any legitimate closes at higher highs without them immediately being given back. It seems like the $9 level is like a place where there's now selling starting to come in. But the other thing to highlight, and we had this conversation many weeks back, but the term structure is just not moving. Right now, almost all of this high nat gas price is all in 2022 contracts. Once you go to 2023, it falls off a cliff and literally is still, the entire strip is trading at half the prices, down in the $4.50, $5 ranges. If there's a real long-term fundamental story behind nat gas, when does it start to reflect farther out on the curve?
Not sure. I sold it all this week, Patrick. Pretty proud of me. You don't follow
What?
my updates,
I,
but
I,
yeah,
I, I told you to roll forward and get out of the front ones and just hold on to the back.
yeah, no, I just decided that was it. I can't remember why. One day I woke up and I was like, "This is it." I thought it wasn't behaving
Okay.
like I liked, and actually, I was lucky because remember there was that LNG explosion,
Yeah.
and the LNG meant that a lot of people, or sorry, a lot of export will got shut in and will stay for domestic consumption. Therefore, the domestic price of nat gas fell lots. Like I think it was down $1 that day, or maybe within the 2 days. And I was lucky because I had done it before then. I didn't get the top, but only liars get the top. But I didn't trade it badly. Jerry Parker would be proud of me.
There you go. So what I want,
Although actually he wouldn't be proud of me because the trend is still up, so I
yeah,
should still be there.
there you go. The just touching on gold and silver, and just like they started today on that inflation number actually breaking down, and then
Yes,
they suddenly
they got a bid.
reversed right in the
Yeah.
while everything else was selling and just started accelerating.
Actually, I
Go,
didn't watch it. Did it coincide with the release of the University of Michigan consumer sentiment number, which by the way was the lowest level or reading ever? And what was fascinating about that is I went back and looked. It's like the 1990 low; it was lower than that. The
this was the
1982
10.
low was
It was
low.
the 10 and 11, the 10 o'clock candle on the hour.
Yeah, see, that's what it was. I think it was the consumer sentiment number that did it because I think that's when that number came out.
Correct.
That's how pessimistic people are about things, Patrick. This is worse, according to people from Michigan. Things might be tough in Michigan. Who knows? This is worse than 1990. This is worse than 1982. Let me just get out my chart here. This is worse than 11. This is worse than 2008. This is just bad. Anyways,
Yeah,
new lows.
yeah.
I thought that was a fascinating chart.
It turned on at 10 a.m. That's when they released it. Yeah, there you go.
So
So
I think that is something to watch for people that are interested in that. Watch the sentiment numbers. I think that they're moving markets more than I would think, because to me they're kind of like a bullshit number. Like who really cares? It's not really telling you stuff, but it seems to be moving markets because the S&P had stabilized, and then again the S&P went down on that number.
yeah,
and made
so
a new round of selling.
So what I want to highlight about gold and silver, again, silver also had a reversal candle off of there, but nowhere near the same kind of reversal as gold. I mean, gold's right back to multi-week highs, and I still think 1900 and 1920 will be kind of a little bit of a overhead resistance for it. But one thing that we've seen a very consistent pattern of is one day pops and then they're faded. And a good example of that is what happened in copper. Like copper had that one day breakout where everyone was sure, and then just the next 5 days gave it all back and more. And this is why I'm not ready to get uber bullish on gold yet, because to me, these kind of breakout candles on the upside are an advertisement for people to come in and start bulling the trend here. And the thing is, if no one shows up and smart money just sells into the pop, and we see, let's say, gold right back to 1850 and then 18 and a quarter a few days later, then it was a complete false start, and we had no business getting excited about gold. And so one day like this is nice, but it's actually going to be the first few trading sessions of next week that is going to be the big tell for me. And that's I'm going to see whether or not they can follow through on this reversal.
Okay, well, there you go. We heard it from the crayon chewer himself.
Yeah, there you go. And I went from using crayons, being crayon king, to now definitively chewing the crayons, right? Like
yes, you did.
It's like a graduating thing. What's next?
I don't want to know.
We're not even going to speculate where that was going. Anyway.
Yep.
But
are you wrapping up talking charts?
Oh no. We still haven't.
Okay, because I just make sure before you wrap up, I got something that's very technical, very scientific I want to talk about.
Okay, sure. Anyway, just wanted to highlight copper. Gave that everything back. The uranium, well, you know what? What's interesting is that at least on the participation unit, when it rallied on that news, it gave it back. Again, it's not that I'm bearish uranium, but it's just not being bold right now. And it's
Do you know, I got all sorts of trouble from my followers, the uranium eyes, when I said I was selling it, because the one thing to me is that I had bought that uranium participation unit when it was trading at a big discount to NAV. And on that announcement, it actually went from a discount to NAV to a premium. And I was like, okay, I'm going to ring the register here. And I got lots of flack from the uranium ice. By the way, uranium eyes are cool, but the real trend, corn eyes. I met someone on Twitter. I should really know his name. I'm just going to see, but he's got the corn eyes going, and that's what I see. Really, mad props to him.
There you go. That's
corn eyes.
That's madness.
I'm gonna get. You know what I'm gonna get? Home builder eyes.
Yeah, you should do that.
I don't even know what they look like, but they're
just two little Monopoly homes on your eyes type of thing.
Yes. And when I get really bullish, they turn into hotels. Okay, let's talk some bonds because these are ugly.
Yeah, I mean, are we gonna this kind of inflation number is obviously the boogeyman for bonds, and like the 10-year right back up toward that previous high, the 30-year not so much, but the 5-year yield. Well, there you go. Like the 5-year definitively broke out, and the interesting thing to me is actually the velocity of the move. Like, can we see? Like, I mean, this is certainly spurring on the idea that there's going. Like, look at the inversions that are happening here, right? Like the way. Well, actually, we're not.
I think 530's traded negative today. Like they ticked negative.
Yeah, no.
210s, I think 210s were still 10 basis points.
Yeah, there it is.
We're not quite there yet.
210s are just 10 basis points. The point is that if things like these 5-year yields rip this way, we're going right back into inversion, right? Like,
well, or the long end gets sold.
You know what? I think that today would have been a day where the long bond would have gotten creamed if that was going to be the case. I think you're just
of course.
You're just talking your book and daydreaming about stuff. Like this is look at this. Look at the move on the 2-year. Look at the move on the 5-year, and this is what you're excited about right here. This 30-year. Ooh, look at that. Oh,
I'm not excited about it. I'm excited about it as an opportunity. To you remember, investing isn't having everyone agree with you now; it's having everyone agree with you later.
Oh,
Jim Grant said that, not me.
Wisdom of Kevin Muir.
Jim Grant's wisdom, not mine. I'm not nearly smart enough to come up with something like that. But I can sell you a Casper mattress as well as Jim can.
All right, I'm done talking charts. So what did you?
Okay, no. Wait. Now this is very scientific, as the guy in Pineapple Express says. Tesla, pull it up.
Yeah.
Have a look at the official closing price. Can you get that?
The official closing price is 6969.
Yeah, 7. Isn't it 6969? It's like Elon Musk did it. He must be so proud.
That's impressive, actually.
Yeah. 69, 60. No, it's not quite 69. 696.69. Yeah. But it's pretty close. Like, it's pretty awesome. He must be so proud.
Yeah,
and his mom must be so proud too. She's very good on Twitter. She really defends him because the world's richest man always. It's always good when your mom's in your corner helping you out when people are mean to you on Twitter.
All right, buddy. Let's go on. Okay, so it's time for skin in the game, bud.
It is time for skin in the game now. We had a bet last week. Did I lose? Oh, I lost. Oh, Jesus. That's ugly. So why don't you tell people? I'm going to be quiet and you can tell people.
Yeah, well, we just did who was the home builders going to be over under the $60.50, and you got.
Was I ever in the money? Was I ever?
No,
in the
money? you just lost right away. It's
It's just selling from day one.
And you know what? The best part was you offered a steak, and like an idiot, I basically chose to talk it down to a bottle of wine, right? Was it a bottle of wine?
Yeah.
But like you offered me a steak. You and your home builder eyes I should have closed the deal on the steak.
You should have. Whenever someone starts talking their position like that,
is like I should have doubled down on it. It's like it's only a steak.
You really should have. It's only a steak. Okay, let me tell people about this. Skin in the Game is our weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows. Now, listen, we are going to change this.
Uh-oh.
And
Now?
we're not quite, Patrick and I are still, no, we're not going to change it now because Patrick and I still have some negotiations to go and do back and forth. But it will be something that will make an event, but an event that's much smaller so that it's more. The piss up was great. It was great meeting everyone, but so loud, and it doesn't really get a chance to talk to people. So I'd love to make something where we have a dinner or something. So we're going to figure something out. Patrick and I are going to go back and forth. We're going to figure out a currency or some way of scoring, and we're going to have something, and then we're going to have a chance for people to win dinner with us. And I know that some people will be like, what the hell, but you get a free dinner at least, even if you have to listen to us. But it'll be something fun like that, but we're not quite there. We still have to figure it out. So the next time, this will be our last time doing the old one, and then we'll have to just settle them all.
Okay,
up,
wait,
Patrick.
listen. Let's be careful here because the next couple of weeks are all wobbly in terms of our scheduling and stuff.
Let's say in
the second half of the year, because that's the start of July. I think that's a good time to officially start it, and that gives you a few weeks to sort out the details.
The details, we'll go back and forth, but it'll be fine. It'll be a different element. But for now, the currency as follows: at Duke, pint of beer, a burger bet, a pitcher, a case of beer, bottle of wine, and a steak dinner. Okay, so now the winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions, as we saw from the pitchers.
Yes.
There was no netting. We've paid off all the pitchers in full.
I mean, there's a couple other types of bets outstanding, but the pitchers were all accounted for, and that's perfect. There's a few burger bets that you still have to settle in.
Yeah, we have to do those when you're actually in the country.
There you go.
And not gallivanting.
So here it is, buddy. This is a little bit of this is the consumer staples versus the home builders.
Okay, okay, that's good. That's even better. So I get a turbocharged one. That's awesome. Let's do it. So do you have? Oh, you even made the
that's
chart.
what I'm saying. This is the XLP over the ITB.
So I want this chart to go down.
You decide. I'm over under 127.
No, but so if I think that XLP
is
the top,
then it's going to go higher.
Yeah. Oh, sold, and I'll do the steak.
You're doing short.
Yeah. And just you want to do a little bit longer?
No.
Since we
we'll settle this when you're.
Whenever our next show is.
Well, okay, so we just so everyone knows, we actually don't have a show next week, and then Kevin might be off the following week. So why don't we?
I am off the next following week. Yeah. So 3 weeks from now.
We settle this in July. Like it'll be will it be the first week of? No, hold on. Let me look at the schedule here. The calendar.
Yeah, it'll be July 3rd. It'll be June. Yeah, July 1st. Let's
July 1st. Okay, so there you go. So,
and are we doing a steak? Are you going to pony up?
I'll do a steak. July 1st, 127. This is the XLP over the ITB.
Yeah, and listen, and you got to promise me whenever you're in town, we do this one. We settle up the steak.
No matter what. No matter what. All right, buddy.
Okay.
Anyway,
so you always got to give the number to Lena, the ratio that right now. 127. So I think it's going lower. You think it's going higher. And what is that exactly? XLP divided by ITB? Now, is there some dividend in there that you're screwing me on?
Did not check. I made this up right now.
Okay, well, then that's fine. If neither one of us knows, that's fine. So we're both equally, as long as you didn't go and try to, have a big X that you're messing me on. Okay, no stupid questions. The time when Lena improves our show tremendously.
How do I get in on the steak? That's kind of what I was thinking.
It's always implied. It's always implied.
I just have to show up when you set up.
Yeah, you just have to show up.
Okay. Yeah. So first question here is a bit of a long one. Hi, Lena.
Okay, let's go.
Hello. Apparently this listener was writing to me, but I have no answers. Hope you are well. Would love to do a piss up in London or Europe if you can make it. If we can ever make that happen.
That would be awesome.
Yeah.
You know what we should do? Listen, I'm rambling a little here because we got a little extra time because we didn't have a guest, but we should do Oktoberfest.
In Lederhosen.
My buddy Dave Lutz from Jones Trading, he goes on and on about this. He thinks it's like the best event of his life.
And
yeah,
like
I
if you had
think
to like
I think
get rid
Patrick
of
says
everything in life.
otherwise.
Oh, you've been Patrick?
yeah, yeah, back in 2016.
He doesn't remember.
No, I
it, but he
remember.
was there.
I'm in. I even have the Lederhosen. Like I've and then the
Okay.
original
Perfect.
leather ones, not that cheap costume shit you get. Like it's
So whoa. Okay, I just underwear is definitely required if you're wearing those, Patrick.
No commando.
That's all I'm
no
saying.
Commando.
No commando Lederhosen. That's all I could think about was like Patrick and some chaps.
it's leather.
Oh,
It's
geez.
Okay.
All right, let's get back on track here.
Okay. Sorry.
I am excited to say that after calling multiple Widowmaker, I think, it says Windowmaker, but I believe this listener meant
Yeah, it's a
Widowmaker,
widow.
trades that effectively crucified my reputation with my millennial friends, such as Tether is a Ponzi, Bitcoin does not walk on water, JGBs are trash, and HKD may depeg, i.e. anything that Kyle Bass strips to the fear porn addicts, and has cemented me as the village paper-handed boomer. I have finally stepped into the ring and landed a punch. I am a long-dated Tesla put and am comfortably in the money. While this makes me feel like a hotshot at the swim-up bar, the position size relative to my portfolio size is probably way too big and sends me running back to my inflatable kiddie pool in my back garden when it goes against me. As I am only long a single put and calls are also downright expensive to hedge, would you look to trade around the position by going long a partial, less than 100 shares, stock at a crayon-drawn support line, or would you buy cheaper close-dated puts? Just some overall thoughts on how you would trade around an in-the-money call or put position with a very high-price stock. Side effects may include listening to the market huddle will give you an unfounded, courageous, cuppy king confidence, which will ultimately result in a gambit of gullible Gerber gaffes as you become geriatric boomer.
That is a great line. And listen, Cuppy King confidence is hilarious.
Yeah.
Do you want to do this, Patrick, or I? And by the way, just 1 second. We cannot give you advice for your particular situation, so we'll talk about hypotheticals, what to do in situations where you have the good fortune to be long a high-priced put with too much delta. In essence.
All I can just say is what I typically do. And once a position has gotten in the money and the delta is approaching 1 and you're making a lot of money on it, there's a trade-off of you're not getting the convexity of the option anymore and you're basically synthetically short, which basically gives you huge volatility. As soon as there's snapback rallies, then you're eating it just the same as if you were actually short. And so what I tend to do is that once I've made a lot of money on a position, I either like to take the profits and replace it with a put debit spread for further gain on the downside, which means that you have a much smaller capital outlay, but keep participating if it keeps going down after you sell it. Or the other one is
Patrick, why don't you one second before you say the other thing? Why don't you explain to what you mean by a put debit spread? So let's say this fellow had bought a $1,000 strike put for January 2024. Right. What would a put debit spread look like?
Basically, at that moment, you're in the money by, let's say, $300 on Tesla. So at that moment, you go and you realize the gain. But the thing is that the one reason no one wants to sell the position is because if it keeps going down, you feel like an idiot for selling early, right? But the thing is that what I would do in this case would go, let's say, and open up like a 700 down to a 500 bear put spread. Now what that does is you take profits on your main position, but now you continue on a much smaller capital outlay to continue to participate on the downside if Tesla keeps going, but you've not risked giving back all of those great profits you've made. And so I like to...
Right. And you made it even more complicated than it has to be. You could just basically sell your 1,000 and replace it with a 700.
That's the role. That was the second part of the alternative. No.
I'm
But that's
sorry.
The second is just to extract the intrinsic value by rolling down to at the money. And when you reduce the volatility, because you're going to go from, let's say, a 90 delta down to 50 delta again, and you're basically degrossing the position just by rolling it down and reducing the volatility and making sure you've taken some money off the table, right?
Right, and that would reduce it. The other thing is that he mentions is that you could actually buy stock and trade it around. That's obviously from a. Is that I always forget this, Patrick, because I know you're always teaching me about capital rules because I'm so used to be as a dealer versus a client. If I'm long puts, long stock, am I paying capital?
On the stock, yeah, you are.
Yeah, see, that's it. As a dealer, you don't, but as a
Yeah.
client, you do. So, but if you have the capital and you want to do it, one of the things is that, as Patrick mentioned, your delta might have your put might have a delta of 90 or even 95, depending on where it is. And you might say, okay, I'm going to buy half of it back. And so I buy half of it. And so you have you buy 50 shares or 40 or 45 or something like that, and then you've locked in your gain on that 45, and then but unfortunately then you're going to be more tempted to trade it around, because theoretically you're long gamma, and so if it rallied back up to 800, you have the chance to sell it, and a whole bunch of things that you can. There's lots of different ways to play it from there. Probably the cleaner, best way to do it is the way that Patrick explained it, is roll down your put from up above down below, lock in your gain, let the market do what it wants to do, and go from there.
Right.
But by the way, what he's saying that he's looking like a boomer for saying things about the Bitcoin. Well, Bitcoin has gotten halved. Luna has gotten 99'd. He's had some good calls there. They're not all bad.
It's not bad. Not bad.
Don't you think? Okay. Anyways, thanks for the great question. Listen, we'd love to do London. We'd even like to do Oktoberfest even more. Next question, Lena.
So next question here. Hey gang, longtime listener here, and especially love the episode on trend following with Jerry. It just makes so much sense. In listening to further interviews with Jerry, he always says one entry, one exit, and one stop. I'm not clear on what the one stop should be, though. The internet is awash with conflicting information. For example, if you enter when price breaks above the 50-day simple moving average, but the next day price drops below and the day after it pops back above, you would have been stopped out despite the trend continuing. To the example, how tight should the stop be to avoid the example? Especially as price can trend on that X day simple moving average, you'd overtrade and get killed in trading fees. B, it seems you're also supposed to combine trend following with the average true range, ATR, to give it a 5 to 20 day price fluctuation. If price drops below the 5-day low, then you exit. Appreciate the continued insight and fantastic shows. Also, apologies for not including any side effects. My girlfriend tells me I'm not that funny and shouldn't even try. Shrug emoji, LOL. With love from DC. Can't wait to make a new friend in the trend.
Oh, very good.
Okay, it's Kev here. I'll give this one a whirl. I think when Jerry says one entry, one exit, one stop, what he is referring to on the one stop is the idea that you shouldn't take partial profits. And there's some debate amongst the trend following community. And listen, I think this is I'm telling you how I understand it. Really, you should listen to Jerry to try to figure out, what he's trying to say. But from what I understand, there's some debate among the trend following community about whether you should take partial profits, whether you should go and adjust for volatility as volatility rises or falls. Should you be upping or lowering the trade? All sorts of different points of view from that. And Jerry's point is that you put on that risk reward at the time of the trade, and you set all those things up. And even if the market changes, the original parameters that you set it up with were hard coded at the time of the trade. So therefore, you shouldn't adjust from how the market trades, and you should just let it run. Now, you are correct that when he says the entry is much different than the stop, meaning that if you go and you enter something on 20-day new high, your stop won't be a function of just where you entered. It'll be another larger amount that is, as you mentioned, something to do about the ATR, but realistically can be whatever you want. I think the thing that Jerry would argue is it needs to be large enough that you don't get shaken off the trade by whatever would be a typical amount that the stock or security that you're trading moves. And that's why they use average true range, because they're trying to make it larger than would be a typical amount in the kind of period where you're waiting for the trend to continue. Hope that answers the question. But I'm with you. I think Jerry was a terrific interview, and I think that trend following is something that will gain in popularity as we get more and more inflation. And
I think that Oh no, sorry, I
Sorry,
didn't
go
mean to
ahead,
cut you
Patrick.
off. I wanted to let you finish, but one thing that I found is that like he's suggesting a moving average as a mechanism for that. What I find helps also reduce volatility stop outs is using moving average crossovers, because it takes longer for two moving averages to cross each other, and it takes a more pronounced move. And so a lot of those little liquidity event days where things wash out below certain levels and then reverse and come back, a lot of moving average crossover techniques smooth those out, and you have a lot less noisy knockouts than if you're just simply using a simple moving average and doing a close above or close below kind of signal.
Oh, there you go. All right, Lena, what's the next one?
So, last question here. Dear Lena, Kevin, and Patrick, I hope this email finds everybody well. My question is, will technical analysis help Patrick avoid the quote unquote mirror formation? I hope everyone remembers that.
I don't remember that. What is it?
I don't even
anyone
remember
remember?
what the mirror formation.
I remember it was a combination. Oh my God, this is so embarrassing.
Everybody needs to remember that we're like halfway drunk by the time.
No, it was. Oh my God, it was because it involved the pelican formation. Remember? Remember when what was it? It was it came into. Oh my, come on. You know what?
Somebody's screaming right now saying this is what the formation is.
Yeah.
So.
Please tweet out what the mirror formation is.
Because we don't even know what it is.
And it's not just a bald fat guy.
No, but you know what? I am going to now make it my mission to reconstruct the mirror formation, because I remember. Oh my God, I'm embarrassed. Okay, so go on with this question.
All right, so.
Oh, I remember. You're absolutely right. I do. It vaguely kicks. There was a lot of innuendo there. Whatever it was, there was a lot of innuendo. Okay, let's keep going.
Okay, so, where did I live? Okay. Will technical analysis help Patrick avoid the mirror formation when the dollar changes its strength regime? I come from a commodity-dependent EM country and failed to diversify my portfolio with enough dollars because I've been thinking that the cross-currency is about to fall. And it hasn't for the last 4 years. It keeps consolidating upwards in this case. Hence, will you agree that chowing crayons could be more important than a macro thesis for FX? And which thesis do you guys think Soros used for the pound trade?
There you go, Patrick. See, everyone knows that you chew them.
But that wasn't chewing. I'm chowing now.
Chowing. There's the next level. We were wondering what it was after chewing. It's basically chowing, which involves less chewing. You're just kind of like biting once and then swallowing.
No, I mean, I think the one thing here is obviously I like to blend the macro and the technicals, right? The macro tells you what's going to happen and why it's going to happen. And the technicals is telling you when has it started and where is it likely to go. And so the thing is that you do need to have a macro thesis, but you do need to be able to observe whether the market is actually playing that thesis out. And so this is where you need to have a perfect blend of the two rather than just saying one or the other. And that's what usually keeps me more often in line with the market moves. But do you have a comment on that? And then how about the Soros trade?
Well, I would just say about the Soros comment that there was no technical in that.
Oh,
Soros recognized that it was more of a game of who could hold out. You knew someone was a weak member had a weak position that they couldn't hold, and it was just kind of bullying them until the position folded. And it's more just kind of like when you see someone struggling with a position, you know that they're under margin and that eventually they're going to sell, and they just keep leaning on it. And that's in essence what Soros did. He just did it with a country instead of with an individual holder.
Yeah.
So it doesn't matter because, and one of the things I'll tell you about technicals is that you need to remember the technicals reflect what's happening in the market. And when you get a very deep liquid market, it reflects a lot of different people, and it reflects the viewpoints of many different participants. But when you start getting into smaller stocks or smaller currencies, you can make technicals look good. And I had something the other day. A buddy told me some stock that he liked, And I looked at it and I said, "This is a great looking chart." And he says, "That's what it looks like when I have to buy a million shares of this piece of shit." And he was making the good looking chart. So you just need to be aware that sometimes that's all it is, and that person can be just as wrong. Like pull up Viacom; it looked great when Bill Wying was buying it. It was a terrific looking chart until he wasn't buying it anymore. Anyways, that's my two bits.
Anyway, Lena, where can people submit their questions?
If you have any questions for Kevin and Patrick, please submit your questions to nostupidquestions@markethuddle.com.
Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter at the Market Huddle. You can listen to us on all the networks. You know where they are. Please rate and review us on Apple, iTunes. We would really appreciate it. Patrick, where can they find you?
You can find me at bigpicturetraining.com or on Twitter at Patrick Ceresna. And Kevin, where can they find you?
I'm on Twitter at Kevin Muir. You can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show. Okay, so let's do this beer. I actually have been sipping mine. I didn't finish it all, Doc. So don't get mad at me if you're listening. Can I go first?
Yes.
I like it, and it is very Coors Light like. I'm a fan. It would have been better, obviously, in Spain at 3:00 in the morning, drunk with you guys. But I still think it's a solid beer. I'm giving it a 4.
Whoa!
Wow,
That's
wow.
pretty good.
It's solid beer. Probably because I haven't had a beer in 3 months.
It's so good when it hits the lips.
I was about to say. All right, Lena, how about you?
I mean, I have sentimental values to this beer now after the 3 a.m. Street pub crawl or whatever you want to call it in Barcelona. I would give this an 8.6.
What?
Oh, there we go.
I mean, it's definitely drinkable. Like I don't even know how many beers I don't know how many beers I had that night, but it was a memorable night.
All right, well, see, my problem is that if I was just rating a Coors Light, I would be giving it like a 4.5. And so the thing is that to me, giving it a high score like that is just something I can't do.
Really?
From a sentiment perspective, I'm going to give it some extra points. I'm going to give it a 6.1. I mean, look,
that's just wrong, man.
No,
that's wrong. You're wrong. Yeah. I think you're getting too fancy and you're sticking your nose up at a good quality beer like this. I don't care if you bought it from a street vendor that looks like he hasn't slept in the gutter forever and like I didn't wash the top off.
Dude, this is just like this is grocery store beer. It's just like, you know what?
Well, there we go. We needed a name of this episode: grocery store beer. We just got it.
There you go.
Okay, I was wondering where we were going to find one. Patrick comes up big at the end. Okay, let's talk about this. Lena, did you get a chance to watch The Staircase?
Actually, I haven't. I've been meaning to. I started, and then I got interrupted. I can't remember what happened, and then I totally forgot to go back to it. I'm only like halfway through the first episode.
Okay. So we can't talk about the...
But I definitely am going to watch it, for
sure. So
So
we're going to take next week off for those who are... and then the next week is Patrick's going to be solo. And although we're going to have Cuppy, well, we should have actually told everyone we're going to have Cuppy, and that's why we didn't have him this time. And the markets were crazy. And so it'll be 3 weeks, but 3 weeks from now, Lena, I'm hoping you'll watch.
I will have a full report.
And we'll remember the scene. Okay, I got a new show for you, though, for those who are interested.
Let's do it.
It is called The Lincoln Lawyer. I didn't realize, like, from the movie, Matthew McConaughey, but it's not. It's this other dude that literally, he sounds French-Canadian, but he's really Mexican. And he reminds me so much of Marco Papic. All I can think is Marco Papic is playing the Lincoln Lawyer. And I know I don't know why. There's just something about him. And I'm sure probably Marco's not going to be upset that I compared him to some Hollywood star. Although, like, people have compared me to a Hollywood star like George Costanza, I might be a little upset. Anyways, it's a good show. And I didn't realize this, but you know how, like, Lena, you're a Bosch fan, right?
Yeah.
Okay, so Bosch is written by Michael Connolly, And I didn't realize this, but Michael Connolly writes The Lincoln Lawyer. And in the shows, Bosch does not have any relatives.
Right.
But in the books, my wife tells me that he has a brother. And that is the Lincoln Lawyer.
Get out. Oh, I just got chills down my back.
Oh.
That's interesting.
Yeah.
That's
it's pretty
cool.
wild, isn't it?
That's cool.
Anyways, I thought that was interesting.
Yeah.
It's a good show. Well, sorry, I shouldn't say that. It is no Bosch, because Bosch is awesome. And it took me a little while. At first, I didn't know if I liked the Lincoln Lawyer, and but like the actual guy. And then he's grown on me, and I really like him a lot.
Well, he's handsome.
Yeah, there
Looking
you
at the
go.
picture right now.
Yeah. So, anyways, you should go and if you're looking for a new show, it's not bad. It's a good summer show. It's a good one.
What is it on?
It's on Netflix, actually, so
Oh,
everyone
it's on
can get it,
Netflix.
or most people can get it, because it seems like almost that's the default one that most people have. Oh, I gotta tell you about this one.
Okay.
So you know me, right? Like I have a little bit of a weird fascination with farming and like livestock, and you know how I want to have Highland cows. Remember we've talked about this, right?
Yeah.
Haven't we?
Yeah, we did.
I've expressed. Yeah, I think we have. So, you know Jeremy Clarkson from Top Gear?
Yeah.
He went and he owns a farm, and he decided before he was just getting like some farmer to farm it. So when he got retired from Top Gear or whatever, Grand Tour for whatever he did, he decided to make a new show where he's going to learn how to farm. And I
feel
love
like
it.
I know about this. I feel like
Yes,
I watched
and
an episode.
I love it. It just keeps
that
getting
might be
better
something I might
and
watch.
better. You should watch it. It's awesome. He gets sheep, and these buggers, they're jumping fences. It's like hilarious. It's great. And all the things that you kind of wondered, like, how do they do that in a farm? It's really great. And you know what? My favorite guy in it is there's this 21-year-old guy that has the farm next door. He's this guy that's been to London once, and he is basically like a Letterkenny version of in England. Like take a Letterkenny and just like move him to England, or the version. He's there, and he said like, "Oh, London, I don't like that." And I don't think he kind of knows that Jeremy Clarkson's famous, but he doesn't give two shits.
Oh, I've seen this. Yeah, I've seen an episode
and
of
he
this.
basically just tells Jeremy Clarkson what an idiot he is constantly, and it is awesome. It is great. And you know Jeremy Clarkson, he's doing stuff where he's like taking shortcuts and doing stuff, and it ends up being a disaster. Anyways, I love the show. He had to kill 3 of his sheep, and he felt really bad about it. It was very heart-wrenching. Anyways, you should go watch it. If you're at all interested in farming,
Yeah, I've seen
and you like
an
that kind of
episode
humor,
of this. Yeah, it's funny.
yeah, it's pretty good. I must say, I'm not finished yet, but I'm a big fan, and I thought it was really good.
All
I
right.
mean,
listen.
yeah, if you like Jeremy Clarkson, you'd like the show.
Yeah, and if you like that kind of dry humor, and it's well done, it's well executed, and yeah, listen. Do I think that Jeremy Clarkson in real life is a jackass? Of course. I'm sure that, like, if I got him, I'd be like, this guy's an idiot. Do I think he makes funny shows? Yes, very much so, and I enjoy them.
So, Kev, hot off the press, Lena, look at the into the chat, what the picture I just posted. So on Twitter, the hot off the press, it was that Dan guy, the Twitter handle count Truculent, posted this. Like,
Oh my god!
how freaking hilarious is it, Lena? You gotta put this up onto the things.
I gotta put this up on Twitter. This is hilarious. Oh my god!
Great job, Dan.
Also very. I'm gonna have nightmares about this burnt into my brain. Oh
It kind of looks like my sister.
Oh my, your sister has a beard.
That is funny. Well done, Dan. That is
Oh, yeah.
that is really
Wow,
great.
that's
So
amazing.
for those who don't, you know what? We should tell people what we're looking at.
No.
There's a very we
Okay.
can tell
Yeah,
people, and then they can go look at it. You know the movie The Notebook, very famous book. You know, with a good Canadian guy running it. Actually, was it 2 Canadians? She's Canadian too, isn't
Yeah,
she?
I think so. Yeah.
Yeah, they're both
Yeah,
Canadian.
2 Canadians. I just realized that The Notebook. This Dan's made the chart book, which is basically Patrick's wooing me. He's taking me for a nice little paddle through the swamp, and he's wooing me. I wore my Sunday best. And Patrick, just in a stupid slobby white shirt there.
with
Well done.
with a nice beard.
Yeah, no, that's got to be the show's
God.
title sequence there. That's awesome.
The chart
well done.
book from the
The chart-
moderately popular podcast this summer.
Moderately
Oh my
popular.
god, that's the best thing I've seen all week.
Yeah, it's
It
good.
could be all month, maybe even best all year. Okay. Well, on that note, you know what? We can't beat that.
That's
No, we
that's a
can't
good
be.
way.
Let's leave on a high note. That's what you
Yeah.
do when you go to a party. You got to leave when the party's
All right.
hot.
Well, listen.
All right.
Just we apologize, everyone, that they'll have to last an entire extra week before getting another huddle session. But I'll be back with Cuppy and maybe even someone else who we'll announce shortly. But we'll have Kev, have a great time on your little trip.
Thank you very much, and a big thank you for you for. Just tell people I'm going to Portugal, so I'm going to be taking one of Patrick's pied-à-terres, and staying there. So it'll be fun. It'll be interesting. So I'm looking forward to it. Hopefully that everyone doesn't see where I'm going and go, God, it's that guy from Canada.
Yeah.
Who did he lend this
It's
place
the guy
out to
from
now?
the chart book.
All right.
It
Anyway,
would be funny if people are like, oh, I know you.
Yeah.
Okay. So you as well have a great time wherever you are in your mystery location, and everyone. So we're going to take 1 week off. Then Patrick is returning with Cuppy and maybe someone else. And then we're all back to regular schedule 3 weeks from now. Regular guests. We got some great ones.
July
It's going to
1st.
be a lot of fun.
It's a holiday, so
It's going to be a holiday, but we're still doing it.
Canada Day.
We're gonna truck through. Everyone, safe trading out there. Thanks for tuning in. We'll see you in a couple of weeks for Patrick and 3 weeks for me.
All right. Cheers.